Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on natural gas. So we saw some nice follow through overnight. We got that break for the higher high and we headed into the inventory report. Or before the inventory report, we had some strength. We saw some profit taking leading into it. Then we formed a lower high and a lower low, still consolidating after that reaction. We do still have a couple higher lows to be watching. I'm looking at 2597 and then down to 2566, which is the must-hold level. Lose that level, and it is a huge red flag for the bulls. But this is not the kind of follow-through day that the bulls wanted on the daily time frame. Like I said, we do still have some supports, and we did get some nice follow-through. So people hopefully noting that we are trading counter the trend, locking in some gains to the upside, knowing that this move is short-term until we get some significant action by the bulls, because on the daily time frame now, this is not a strong candlestick for confirmation. It is a higher low and a higher high, but you see that upper wick of all that profit taking. It is very possible that this is just another bear flag, short-term bounce, cooling off oversold conditions before continuation to the downside. So we need to be aware that that is a strong possibility because we are playing against the trend. Sure, it would be nice to nail the bottom and see, multiple days, a week of upside in a row, but that is not the way it works most of the time when you are playing counter the trend. So if ever I'm playing counter the trend, I will use smaller positions, number one, than if I'm trading with the trend, and I will be quicker to lock in those gains. So here on the 4-hour time frame, it's a bit different of a perspective, and we are back testing and holding the 10-period moving average. So remember on the 4-hour chart, I was pointing out this resistance level. We rejected 1, 2, 3 times. And then overnight, it became support, and we are holding it the previous two candlesticks here. So if we can continue to hold this 10-period moving average and head back up to 270 resistance, then the bulls have a chance for some continuation, but we just want to be really cautious on that daily time frame with that big upper wick. The weekly time frame is trying to form a bullish reversal candlestick, but we're going to have to see that move back to 270 in order to see a bullish reversal hammer, because the real body of this candlestick as of right now is too significant for it to be considered a bullish reversal candlestick. So UNG, you can see how weak this bounce attempt looks. Nice gains off the low for a short-term trade, but with weakness, we need to be very cautious. So resistance is 678. 677 was the high of Wednesday, or make that Tuesday. So 678, there's a gap all the way up at 714, but if natural gas can't get over 270, we're not going to see that price. So same kind of little short-term bounce that we saw back in mid-February before continuation to the downside. And we do have a bit more bull volume behind this move, so that is 1 point in favor of the bulls. And we do have a bullish reversal hammer on UNG weekly time frame if we close here or better tomorrow. So holding the lower Bollinger Band support after a couple gap down opens, looking for a bullish reversal candlestick, and we'll need confirmation next week with further follow through. So tomorrow's a pretty important day for natural gas, the commodity, and we got to see, wrong chart here, but we got to see that 4-hour moving average, hold the 10-period moving average, and get back up towards 270. Obviously, a break of 270 would be very bullish, and we'd be looking up at 2745 as the next resistance level. So nice short-term gains. Want to be cautious here against the trend, and still a chance for continuation tomorrow. Red flag number one for bulls is a break of 2597. Big time red flag would be a break of 2566. I appreciate you watching, and we'll check back in over the weekend.